Next question from Matt, which is the second number 2 question with 72 upvotes. Keith, been using the process for years successfully, but the one thing I always seem to screw up is options and specifically sizing. How do you think about option sizing? Do you consider notional value or just percentage of capital, spreads or naked calls, puts? When I make mistakes, it's usually options. Actually, you could put me in that camp too. I have a really hard time with options, but yeah, curious to get your thoughts on how you do it, and when it's working for you, how you're positioning.
Well, the way you can screw up options is that they expire, right?
Yeah.
I mean, if you own the cash position, you can actually risk manage it a lot easier.
Yeah.
I have no idea what his issues are. I mean, if it's a hard question to answer, right? Like questions. I got issues trading options. Well, I don't. So I don't know. Like I don't know. I don't know. That question.
Yes.
Other than, like, if there's a question on sizing, you don't size options positions like you do cash equity positions, right? So if our max equity position is 6%, that's mine, okay? Whatever yours is, it is. If you had more than that, you just realized, especially if it was a momentum stock, that nanu, not a good thing to do. Again, don't do that. So again, options will never be above 50 basis points of my capital at the single option position, ever. 50 basis points. So instead of incrementally adding 25, 50 basis points at a time like you would a cash equity position, it'd be 5 basis points at a time in options. 5, 10, maybe 15 basis points at a time. So it's different because there's more leverage. Because there's more leverage, you go smaller.
Yeah.
Okay? So if you're buying, it's the same thing with buying a micro cap or a smaller cap stock. Like, I don't buy 25 to 50 basis points in that relative to Microsoft. Microsoft, I bought 100 basis points on the open yesterday. 100, okay? So it's okay. My max is 6%, I buy 100. But on the small cap stock that I'm long, this EGYTF thing, it's like 30 cent stock. I bought like 10 basis points, right? It's not like, I'm not doing the same thing with mega cap and a complete micro cap. So that's just something to think about. These are all things that I consider a given. Apologies if I haven't explained it to everybody all at the same time, but again, maybe there's a good answer to a question that I wasn't really good at answering.
Actually, a couple follow-ons there, and I don't know if you have rules around this, but and maybe it's different in different markets, different positions. But do you how far do you typically go out in terms of expiration, and then how far do you go out in terms of being close to the money or out of the money? Like, do you have rules around that or?
Yeah. I mean, and by the way, if I said the company's called Iguana. Like, guys, don't go run out and buy like a 5% position of Iguana, all right? It's EGTYF. I don't know if I gave the ticker right. Again, I was being a little garrulous, and I apologize for that, but it's true. I was buying a 40-cent stock yesterday in the midst of the end of the world happening. But back to your point on, what is the strike? Well, it has everything to do with what the setup is.
Yeah.
The setup is the strike. You don't sit there and say, well, I always buy at the money options, or I always buy 1 week options, or I'll max go out 2 weeks, or I'll only buy long dated options because I like this over a long period of time.
Yeah.
You have to buy those options,
based on the setup,
preconditioned on the setup. Again, think of it just like anything in life, Jonesy. You're a actively dating and good looking guy. Like, what is the setup? What's your go-to move? Like, is it always the same? I mean,
no, it's a very good point. You got to read your audience when you're dating, right? It's a different setup for different prospects. I'm sure people think the same thing about me. They have to adjust their MO a little bit. But yeah, so it's a good point. When you're trading options, you got to think about the setup, and also like 50 basis points of your capital, sort of the max you should be thinking about.
Yeah, we can, like, the asymmetry of the setup, the payouts on the setup. This is actually, apologies for not citing it again, but today, this book right here, please read this book. And if you don't have time, and if you're not a big reader, just go to the back of the book and go to the summary points. Like this point on stuff you don't know versus stuff you know. See that right there? See where I'm underlining and stuff? This is a real important book because it challenges your belief systems, right? What is your belief system? A lot of people have a lot of beliefs. There are entire communities, from the mob on Wall Street bets to the the Maxis and the gold bugs. These are all distinct communities with explicit belief systems. But the thing about belief system, they're the foundation, as Annie Duke teaches us. They're the foundation of who they are, what they do, what they say, what they tweet, and most importantly, what they do in the particular moment that matters of risk management. Yep. You want to play against these people because our belief system is that all of their beliefs are not true. And moreover, they're not just not true, they're very much not true at the particular time where it matters for you to be right. Okay, so my truth is last price or the volatility of the price combined, right? That's the truth. That's the score of the game. So again, what you want to do is, again, be very much aware of all the uninformed volume out there, and you want to be macro aware and take advantage of it.